It's time for the midweek check-in here on Stonkcast, folks. The trade deadline of July 9th came and went. We'll break down the latest with President Trump and his proposed tariff plans. Also, Nvidia is at a historic $4 trillion market cap. We will break down that story. Also, Elon is now a political disruptor. Plus, we will unpack the Fed's FOMC minutes that they released on Wednesday to get an idea of what the Fed is thinking as far as rate cuts, preview next week's earnings, and also break down what really matters in the key economic data yet to come this week. All that and much more to come. Make sure to like, subscribe, and follow wherever you listen to podcasts. And now, let's get into it. Welcome back to Stonkcast, the market show for the average Joe. Whether you're a diamond-handed degenerate looking for the next 500% play or a more conservative swing trader or investor, we've got you covered. We tackle the latest market news, give our 2 cents, and maybe, just maybe, help you make some money along the way. I'm your host as always, Brandon Shar. Welcome back, folks. We got a midweek check-in here. We got a lot to unpack, so let's jump right into it. First of all, want to do a quick look at the markets overall and just kind of see where we are at. We continue to fly high, of course. Let's take a look at the heat map from Wednesday. Nvidia was up big, which we'll get into. Microsoft, Apple, VGO, Google, Meta, some of the bigger players in the market. And overall, if we take a look at the S&P 500, we were up 0.6%. And we just continue to fly high. We closed on Wednesday at 62.63. And if you recall from the last episode that we did, I talked about how the RSI, the relative strength index for the overall S&P 500, was really in overbought territory. And we were kind of due for a bit of a pullback, which is exactly what we saw on Monday and Tuesday. But then Wednesday, we had another green day. And it looks like we're continuing to curl back up, again, sitting at 62.63. And as of right now, the RSI is still pretty overbought, sitting at 70, but not as high as it was on Friday when it had touched 75. So it did cool off a little bit. We did dip below 70. We got down to 67, and now it's starting to curl back up again. Really, some of the next levels I'm paying attention to on the S&P 500 right now would be 6,300. I think that's going to be a pretty important one. That's really the first target. I want to see if we can hit that first, and then, we can look at some further targets. But as of right now, we do seem to continue this bullish trend. We're getting a lot of tariff news, which we'll get into, and it's not really affecting the market the same way it did back in April. So the market is shaking off tariff news, and we just continue to fly high. We did get a golden cross, which is a very, very bullish sign on the S&P 500. That would be the 50-day moving average crossing above the 200-day moving average. So we actually had that happen back on June 30th, and we are just continuing to fly high. If we take a look at the NASDAQ, we were up 0.7% on Wednesday. This thing hit another all-time high. Tech continues to be the champion in the market right now. Let's take a look at the Dow. The Dow Jones currently sitting at 44,458. On Wednesday, it was up over 200 points. Had a pretty rough Monday and Tuesday, but also above the 200-day moving average. And that 50-day is creeping up to the 200-day. Looking for another golden cross there as well. And really, the outperformer so far has been small caps. So the Russell has just continued to fly high. You had IWM, the ETF for the Russell 2000, was up over 1% on Wednesday. We are above the 200-day moving average on that as well. And small caps have really been looking great of late. If we take a look at the VIX on Wednesday was down over 5%, pretty big drop on the VIX. And we have cracked the 16 level, which is pretty insane to think about. We are currently sitting at 15.94, so just a hair below 16, but the VIX continues to come off as really confidence in the overall market continues to build. Now, if I wanted to be a bit pessimistic, I think we are starting to get into a place where I wouldn't be too shocked to see an uptick in the VIX to, I just think we've been coming off so much of late that I wouldn't be surprised to see a little reset to the upside for the VIX. But as of right now, things are looking pretty good there as well. Let's jump into some macro news. So as we all know, President Trump announced his reciprocal tariffs back in April, and he basically shortly after that decided he was going to pause that for 90 days. That 90-day pause ended yesterday on July 9th. And so we got this from CNBC. Trump sends more letters dictating high tariff rates around the world. President Donald Trump on Wednesday sent letters dictating new U.S. tariff rates on at least 7 more country imports, leaning into his aggressive approach to resetting America's global trade relationships. The latest letters, revealed by Trump via Truth Social screenshots, were sent to various countries, leaders of various countries, including the Philippines, Algeria, Iraq, Libya, Sri Lanka, just to name a few there. Trump had teased the announcement Tuesday evening, writing on social media that he, quote, will be releasing a minimum of 7 countries on Wednesday morning and an additional number of countries in the afternoon. The new round comes 2 days after Trump first shared letters telling 14 countries' leaders that their exports to the U.S. would face steep new tariffs starting August 1st. The nearly identical 2-page letters signed by Trump on Monday were sent to various countries, some of the more notable ones, Japan, South Korea, South Africa, just to name a couple, but there was a bunch in there. The tariff rates for the 21 countries targeted so far range from 20% to 40%. The letters note that the U.S. will, quote, perhaps consider adjusting the new tariff levels, quote, depending on our relationship with your country. So for those on YouTube, if you take a look here, according to CNBC, this is an updated U.S. tariff rates on imports chart, basically just laying out what that tariff rate was April 2nd versus what we are seeing now with the letters being sent out. And overall, pretty much the same, honestly. Thailand, for example, 36% on April 2nd, 36% as of July 9th. And overall, they're pretty much the same. You got like Sri Lanka, for example, was 44%, now 30%. But majority of these are within a few basis points, pretty much the same as they were back in April. The letters all say that the tariffs are far less than what is needed to eliminate the trade deficit disparity we have with your country. Trump frequently claims that trade deficits show the U.S. is being taken advantage of, though many experts disagree. A number of the countries that have received letters so far are relatively minor U.S. trading partners, and while the U.S. has trade deficits with all of them, some of those gaps are trivial. So that's kind of where we stand right now. I would imagine we're going to continue to see more headlines in the coming days as we end out this week here in July for additional letters being sent out. These are, we're getting letters, right? But again, as this article points out, these are all minor trading partners. Of course, the big ones that we care about are really going to be China. We're going to care about the EU, which as of late is saying that they're not going to give in to Trump. And so they're going to put up a fight. And so really, those are the big ones. We want to see what happens with Europe overall and really with China being a big trade partner as well. But that's where we stand right now. But again, I think that right now the market continues to fly high, even with these tariff letters getting sent out. I think in part because they are such trivial matters in the sense that these are minor trading partners. The big market movers are going to be some of those big trading partners that we have. Again, China, the EU, things like that. So those are really the big boys that the market wants to see. So that's what we got right now as far as tariffs. We'll, of course, keep an eye on that. I'll keep you updated as we get more news on that. That's where we stand right now, though. Let's move on to Nvidia, folks. So first of all, let's take a look at the chart for Nvidia. This thing continues to fly freaking high. So Nvidia, according to Yahoo Finance, becomes the first company to reach 4 trillion with a T market value. Nvidia on Wednesday became the first publicly traded company to hit the 4 trillion mark, surpassing fellow tech players including Microsoft and Apple. The chipmaker's stock price is up around 22% year to date and 24% over the past 12 months. Nvidia closed Wednesday's session at a record high, up nearly 2% for the day. Its market cap ended up slightly under the 4 trillion mark at the close. The move comes as the chip giant continues to ride the wave of generative AI hype that kicked off with the introduction of OpenAI's ChatGPT in 2022. Nvidia's chips, modified graphics cards, and CUDA software platform are designed to both train and run AI programs, giving it a strategic advantage that rivals AMD and Intel continue to struggle to overcome. Tech behemoths, including Amazon, Google, Meta, Microsoft, Tesla, and others, are spending hundreds of billions of dollars on the company's hardware as they build out the data centers necessary to provide cloud-based AI offerings to their customers and create their own internal AI models. So Nvidia is leading the pack right now when it comes to AI. That is very, very evident just based off of the chart and where they're sitting at right now as far as their market cap. I mean, we talked about Meta a couple of weeks ago and how they are investing in more data centers so that they can build out their AI piece of the puzzle. But as of right now, Nvidia is just simply crushing everyone. If we take a look here at global rankings, this website, companiesmarketcap.com, taking a look at market caps overall right now. Nvidia, of course, at the top, again, closed a hair under 4 trillion at the close, but cleared 4 trillion intraday on Wednesday. You have Microsoft below that, sitting at 3.7 trillion, Apple below that at 3.1, Amazon, and then Google rounding out the top 5. So as far as the chart goes on Nvidia, of course, it's continuing to fly high. And we got the new market cap valuation. As far as a relative strength indexed reading on this right now, it is overbought, sitting at 73. But hey, it could continue higher. We saw the RSI get as hot as 76 back around June 27th. So we will see if this can continue to fly high. But as of right now, Nvidia is on top of the world, literally. As far as next levels to pay attention to on this, this is where Fibonacci extensions come in very handy. So some of the levels that I'm paying attention to right now on Nvidia would be basically the one, just a hair under 180, 178 based off of the Fibonacci retracement, Fibonacci extension from the April lows that I'm looking at. So really based off that, we got another $15 of upside, I think, in this. That's what I would be looking at. Although, to be honest, I feel like Nvidia is kind of challenging to day trade. It doesn't have massive moves intraday. And as far as the options chain for it right now, taking a look at the IV percentile on it, we're currently sitting at 8%. Which is just insane, folks. That means that 92% of the time in the past year, the IV on this, the implied volatility, has been higher than it currently is. So it's very, very, very low. So, with that being said, premium is going to be cheap if you're a buyer of premium. And as of right now, the put to call ratio from Wednesday was just a hair under 0.60. So, of course, people are very bullish on it. If we take a look at the next monthly expiration, which is July 18th, just to take a look at some of the open interest and where majority of the money is at right now, there is a ton at 165. And then the next notable strikes, I would say, is 170. And then you actually have a decent amount of open interest sitting at 200, which is a very, very bullish projection for 9 days out. But that's where we are at on Nvidia. We'll see. We'll see if it can keep climbing high. But as of right now, Nvidia's just leading the way as far as AI, as far as tech, and they're killing the game, very simply put. Let's move on to some more macro news. So on Wednesday, we got the FOMC minutes from the Fed rate decision that came out a couple weeks ago, just kind of laying out, what the Fed overall, including Jerome Powell, of course, but other Fed members, where they stood on the Fed rate decision and what the outlook might be. So according to this article, most Fed officials see rate cuts coming, but opinions vary widely on how many, minutes show. So Federal Reserve officials diverged at their June meeting about how aggressively they would be willing to cut interest rates, split between concerns over tariff-fueled inflation and signs of labor market weakness and economic strength. Minutes from the June 17th, 18th meeting released Wednesday showed that policymakers largely held to a wait-and-see position on future rate moves. The meeting ended with Federal Open Market Committee members voting unanimously to hold the central bank's key borrowing rate in a range between 4.25 and 4.5%, where it has been since December of 2024. However, the summary also showed a growing divide over how policy should proceed from here. Quote, most participants assessed that some reduction in the target range for the federal funds rate this year would likely be appropriate, the minute said, as officials saw tariff-induced inflation pressures as potentially temporary and modest, while economic growth and hiring could weaken. How far the cuts could go, though, was a matter of debate. Opinions range from a couple officials who said the next cut could come as soon as this month to some who thought no reductions this year would be appropriate. Though the minutes do not mention names, Fed governors Michelle Bowman and Christopher Waller have gone on record saying they could see their way to cutting rates as soon as the July 29-30th Fed meeting if inflation stays under control. At the same time, several officials said they thought the current overnight fund rate may not be far from a neutral level, meaning only a few cuts may be ahead. Those officials cited inflation still above the 2% goal amid a resilient economy. So as of right now, the Fed, based off of the minutes release on Wednesday, is kind of in the middle. There really isn't a clear indication of which way we're going to go. I think for a while now, we've been under the assumption that we're going to be looking at probably 2 rate cuts this year, maybe only 1. I've even heard some wild experts saying that we may not get any at all. We may even get a rate hike. I can't imagine how Trump would respond to that if that actually did happen. But if we take a look at CME Group and we take a look right now where we are at with that Fed rate target, of course, we are sitting at the 4.5 percentage. Again, we've been there since the end of 2024. And as far as July, right now we are sitting at a 6.7% chance of a 25 basis point cut in July. Very, very low probability that we will get that. And that has just continued to drop. It was at 20%. Now it's down to 6. If we take a look at the probability of a 25 basis point cut in September, currently sitting at 64.4% chance of that. And then as far as an additional rate cut down to, 4%, the odds of that happening in October currently at 44%, and for December about the same, 42%. So we are looking, it looks likely that we will at least get one. The odds on that second cut happening in the year 2025 are still below 50% right now, but we will see as we get more hard data, as we get more clarity around trade policy, if, that number starts to uptick. But as of right now, that's where we are sitting on that. Let's do a quick check-in on the economic calendar for what we got coming up for Thursday. So initial jobless claims drop at 8:30 a.m. Eastern time. And really that has been the highlight for this week as far as key data. It's really a soft week when it comes to economic data. Not a whole lot coming out as far as like volatile readings. We had the FOMC meeting minutes on Wednesday that came out, and really initial jobless claims coming out on Thursday morning. Here is going to be really that next piece. We also get a 30-year bond auction later in the day at 1 p.m. And if we take a look at where the 3-year note auction came in on Tuesday, the expectation was 3.9%. We came in at 3.8. So I'll be curious to see where that 30-year bond auction ends up landing. That's a pretty big one. If you recall last month when we had that bond auction, the market had a pretty volatile reaction to that as it came in weak, the auction that is. So let's see where that one plays out. We do get Fed Waller speaking at 1:15 p.m. And you got Daly speaking as well at 2:30 p.m. Eastern. So Something to pay attention to there. You get some Fed speakers coming out. Let's see if they say anything new regarding rate cuts. Friday, not a whole lot going on. That's what you got for the key economic data for Thursday. And keep in mind that next week is really going to kick off Q2 earnings. We're going to be hearing from some banks. And then keep in mind that later on in the month, we're going to have some of the big tech players coming out with their earnings for Q2, such as Meta, Microsoft. You got Netflix also is going to be reporting earnings. So we are about to kick off a whole new earnings season. So definitely have that on your radar. And then lastly, I couldn't end the show without talking about Elon, of course, who's always in the news, folks. Elon Musk lashes out at Tesla bull Dan Ives over board proposals, says, quote, "shut up." That's it. And him tweeting "shut up" sent Tesla down pretty big. I believe it was on Monday. So according to this article, Tesla CEO Elon Musk told Wedbush Securities' Dan Ives to shut up on Tuesday after the analysts offered 3 recommendations to the electric vehicle company's board in a post on X. Ives has been one of the most bullish Tesla observers on Wall Street with a $500 price target on the stock. He has the highest projection of any analyst tracked by FactSet. But on Tuesday, Ives took to X with critical remarks about Musk's political activity after the world's richest person said over the weekend that he was creating a new political party called the America Party to challenge Republican candidates who voted for the spending bill that was backed by President Donald Trump. Ives' post followed a nearly 7% slide in Tesla's stock Monday, which wiped out $68 billion in market cap. Ives called for Tesla's board to create a new pay package for Musk that would get him 25% voting control and clear a path to merge with XAI, establish guardrails for how much time Musk has to spend at Tesla, and provide, quote, oversight on political endeavors. So Elon didn't like the fact that Dan Ives decided he was going to put his 2 cents in, told him to shut up. And so that's where we stand on that. And really, this is just a very volatile company right now, Tesla, that is. Just given the fact that we don't know what Elon Musk's next move is necessarily going to be. We don't know what he's going to do next. And he did report over the weekend, he said Saturday, that he has formed the America Party, which he claimed will give Americans back your freedom. He hasn't shared formal details, including where the party may be registered or how much funding he will provide for it, or even which candidates he will back. But he has announced that he is starting a political party. And so obviously as a Tesla investor, that's not something you want to see, because you want Elon focusing on Tesla. And so if we look at Tesla from a technical standpoint, right now, I would be very nervous being bullish on this. In fact, in full transparency, I am back on the bear side. I had some puts on Tesla, which I shared. I got my face ripped off on the other week. I am back in, folks. And here is my thesis. Here is the reason I'm back in. Take it for what it's worth. But as of right now, if we look at the Fibonacci levels on the daily chart over the past year, with 182 being the low, 488 being the high, you have the 61.8% retracement level. That is a very, very important level. That is a deep retracement. And usually if we're going to get a bounce, it's going to happen there. If we break down, you're going to see some more volatile downside. And it just happens to line up that 61.8 retracement with a key psychological level of 300. So Tesla, the Fibonacci level is technically 299.10 if you're following the low and the high for the past year. But that range, right? It's right around that 300 level, and it's a very, very important level. We saw, back on July 1st that Tesla gapped down to that level. It held it, and then it crawled back up to about 318 before getting smacked down, over the weekend into Monday due to all the news regarding the new political party. And so really since then, we have not been able to hold above, as you can tell for those on YouTube, of that 299 fib level, the 61.8% retracement level. Also below 300, like I said. So we have 3 days now where we have been below that. We had a red day on Wednesday. Tesla was down 0.6%. And really towards the end of the day was when it got smacked down. And so as of right now, it looks bearish to me. Now, as far as price targets, I'm obviously no expert. I can't tell the future. But really, in my opinion, the fact that we can't get above 300, I think this is showing weakness from the bull side. I think the bears are going to step in here. And I'm expecting this thing to retest the lows of 273 that we saw back on June 5th when the initial Elon Trump drama began. So that's really my first target. I'm looking to see if we can't, if we can't hold 300, there is some resistance at 290. I'm expecting if that 290 breaks, I think it's a clean shot down to that, 270, 275 range personally. But we will see what happens. Who knows? Maybe I'll get my face ripped off yet again. Maybe I'll make a nice profit. That would be great. I would, of course, be happy with that. We will see what happens, but as of right now, that's what I'm paying attention to. That's what I got for you. I will be back on Sunday, as always, for the market prep video for the week ahead. Again, we got some key earnings coming up, so make sure to be on the lookout for that. Hey, share this with a friend. Drop a comment. Let me know what you're paying attention to, what your thoughts are on the tariffs, what your thoughts are on Elon starting a new political party. Make sure to like, subscribe, and follow, as always, wherever you listen to podcasts. And folks, remember, plan the trade and trade the plan. Have a good one.